Bitcoin is a really tiny market. Okay. And compared to all the other markets, it is literally not literally, but figuratively a wounded mosquito in a 1,000-mile hurricane in size. Okay. And I think the Bitcoin community makes a little bit too much up about where they fit in the world system, and they're tiny. And so what are we seeing? We're seeing, and I think that's the good news, by the way. So to me, Bitcoin is performing exceptionally well. We haven't had the big drawdown that everyone was expecting. We had a 36% drawdown off 126. I have a rule: when it starts getting to 20+% drawdowns, I start looking at deploying again. And it went to 30, 35. So
Bitcoin may still be a small player in the global market, but its potential as a high-value, scarce asset is capturing the attention of serious investors and reshaping the flow of capital. Gary Cardone, an American serial entrepreneur and market disruptor, underscores the strategic potential of Bitcoin as a business asset. Despite widespread acclaim from cryptocurrency enthusiasts, the Bitcoin market remains relatively small, figuratively a wounded mosquito in a 1,000-mile hurricane, compared to traditional financial markets. This limited scale highlights the potential for substantial upside as institutional and private capital continue to explore its adoption. Historic movements in gold and silver, with silver even outperforming gold, signal a broader shift toward trusted, long-established stores of value. Governments, pension funds, and institutional investors continue to favor assets with proven stability, while Bitcoin's scarcity and structural integrity provide a concentrated alternative capable of preserving value in a potentially debased financial system. Despite a 36% drawdown from a $126,000 peak, Bitcoin has demonstrated resilience, and investors who acquired positions near $69,000 remain in strong profit territory. The current influx of capital surpasses historical levels in both volume and quality, reflecting a deeper, more stable investor base with reduced liquidation risk. Recent price stagnation over 6 months has been largely tax-driven, including SPRS-related allocations. Cardone's acquisition strategy targets Bitcoin under $100,000 per coin, aiming for a total of 1,500 BTC. Sentiment data indicates that the top 12 stablecoins have lost $2.24 billion in market capitalization over the past 10 days, suggesting a capital rotation from underperforming altcoins toward commodities such as gold, silver, and copper, which may temporarily limit Bitcoin's short-term buying pressure while reinforcing its long-term strategic value. Share your thoughts in the comments. Hit like if you found this insight valuable, and don't forget to subscribe for the latest Bitcoin market updates. Now let's enjoy the interview.
I love the idea of Bitcoin as a business. I don't know why people don't get this, but it's not a novel idea by me. I've been saying this for some time, but I think I'm articulating it in a different way. For 2026, I look at gold and silver, and although the Bitcoin people want to talk about Bitcoin being the superior product, Bitcoin is a really tiny market. I just want to emphasize this again. Bitcoin is a really tiny market. Okay. And compared to all the other markets, it is literally not literally, but figuratively a wounded mosquito in a 1,000-mile hurricane in size. Okay. And I think the Bitcoin community makes a little bit too much up about where they fit in the world system, and they're tiny. And so what are we seeing? We're seeing, and I think that's the good news, by the way. I don't think you want to be the top dog on the chart. Top dogs on the chart always end up being the poorest performers, man. Like, I want to be the late arrival, right? So we have gold doing something it hasn't done in 1,000 years. Silver is outperforming gold. And it makes total sense to me that you would have old money, government money, pension money, secure money all moving to what they know and they have known for decades and centuries, maybe not centuries, but you get my point. And that old money wouldn't first move to Bitcoin, and that gold and silver are telling us the system is broken. People are moving to assets that they know can't be defunct, debased, diluted. Like if I order some, Kool-Aid or some tea, I'd like some concentrated tea. I don't want a diluted glass of tea that's been watered down 37,000 times. So to me, Bitcoin is performing exceptionally well. We haven't had the big drawdown that everyone was expecting. We had a 36% drawdown off 126. I have a rule. When it starts getting to 20+% drawdowns, I start looking at deploying again. And it went to 30, 35. So, a friend of mine who's been probably shouldn't be telling his family that they should buy Bitcoin because he doesn't probably know enough about the industry yet, but he put a meme up that he was going to his family's houses, who he convinced 4 months ago to buy $126,000 Bitcoin, and he was terrified. And I'm like, dude, all you got to do is show him the charts, okay? Anyone that bought anything off $69,000 4 years ago is in the money, okay? Like I think a 30% return off 69,000, you would have had to be the idiot to buy the 69,000, that one little Bitcoin that traded there. And you would be doing really well 3 years later. Okay. You'd be at 96,000. And most investors, that's a 10% return a year, dude. That's awesome. Okay. And you fucked up. You really messed up, right? You didn't keep buying. All you did was buy the very top. And I'm convinced that at 126 minus 30%, if I can buy Bitcoin at that level, or if I can buy it at $69,000 at a 30% discount when it just hit a high, I'm going to do extremely well, unless I'm judging my performance by a minute or hourly chart, which I don't know anybody that got extremely wealthy looking at minute charts or daily charts. Maybe dailies, but not hourly charts. So the money that's coming in here, Robin, one, it's larger than all the money in the first 13 years of Bitcoin's history. All the money that flowed into Bitcoin's history has been massively surpassed in volume terms and quality. I would actually build the case. It's better quality money. No offense to the old guys, but to the OGs, but it is better quality, has deeper roots. It doesn't get liquidated as easily, and it's extremely well thought out. And that's, I think, what we're seeing here. We're seeing a slow movement of diversification away from other assets and into Bitcoin, and/or we're seeing fresh money move into Bitcoin that is coming out of those distribution models of bonds, real estates, private equity sales. And there's a lot of really good reasons why we have suffered on price here in the last 6 months. Very logical reasons. Most of those, I think, were tax driven, and they all came through the SBRs. And everybody tried to get clever on the SBRs, and they fucked up the Bitcoin position. So, I'm as bullish as I was. When was the first time I was on your show? 2 years ago, 3 years ago? I'm probably more bullish today than I was. And I've raised my goal of how much Bitcoin I want to obtain. And by the way, I am absolutely shocked that I'm still able to buy it at 5 digits. This is a blessing for me, man. Like, I hope it goes to 57. I mean, literally would love it to go to 57 again, to test that. What was that? That was a 200-day moving average. I would love to see 57 because I could double my position, man. When I met you, my goal was to buy 1,000 Bitcoin. My goal is now to buy 1,500 Bitcoin. Because I didn't know, I thought it was going to run here. I'm like, shit, I won't be able to pick up 1,500. The only thing I'm going to be, if I get to 1,000 under 100 grand, I'm going to be doing awesome. I'm going to be doing absolutely awesome.
As traditional banks continue to exploit customers for short-term gains, Bitcoin is emerging as the disruptive alternative reshaping the flow of global capital. Gary Cardone reveals that competition in the finance industry is essential but must not come at the expense of customers. He critiques legacy institutions such as Bank of America and J.P. Morgan for prioritizing short-term shareholder gains over client welfare, drawing parallels to abuses in big food, big pharma, and agriculture. Such practices are unsustainable and public backlash is likely, creating an environment favorable to Bitcoin and other digital assets. Even a small segment of the population revolting against systemic abuse can significantly shift the financial landscape. Cardone highlights the advantage traditional banks hold through hidden fees and control of idle cash, noting that trillions of dollars in cash accounts and money markets could be redirected toward Bitcoin, digital banking products, or ETFs. Legislative clarity, including measures like the Clarity Bill and stances from firms like Coinbase, reinforce a level playing field between digital and legacy banking systems. Migrating out of the traditional system remains complex, particularly for high-net-worth individuals, yet this exodus is set to accelerate Bitcoin adoption. With wealth transfers from older to younger, digitally savvy generations, capital is expected to move away from gold and silver toward Bitcoin. Buying Bitcoin directly remains simpler, cheaper, and more efficient than mining, positioning digital assets as a strategic vehicle for the next wave of wealth transfer. Let's get back to the interview.
Okay, there's some competition now. You know that we need competition in the finance industry. There's nothing wrong with that Bank of America and J.P. Morgan. I'm sure you guys can figure out how to compete without taking advantage of your customers. At the expense of my customers, I take care of my shareholders. This is the new paradigm for Wall Street. I don't care about my customers, McDonald's, Popeye's Fried Chicken, Cracker Barrel. I will poison my customers so that I can show my shareholders, who I have a legal responsibility to, that their stock price is going to go up for 90 days. That is not sustainable. None of you companies are going to survive abusing your customers for the benefit of the shareholders. And the shareholders are idiots. Okay? And I mean, this is going to happen big pharma. It's going to happen in big food. Oh, wow, big pharma and big food. It's probably going to happen in agriculture because they're poisoning the plant to benefit shareholders. They're poisoning human beings, the very customers that consume this stuff. Americans can only get so fat, dude. Okay? Until they then introduce a product called Ozempic, and then they get Oprah on there. Hey, it's a gene, man. You're going to have to take Ozempic. I think we're coming to a point where humanity is basically going to really dig their heels in and say, no, stop it. You're so abusive at this point. I can't think of a public company that's not being abusive right now. That is very, very positive for Bitcoin. If you have 3% of the population revolt, we win the game, dude. 3% of the population revolts in any country, you win the game. 50-50. Most people are 50-50, right? They're not going to get off their box. You just need 3% of the people like me that are massive disruptors. We're angry. We don't think it's fair. I'm angry because it's not fair, JP Morgan. Visa, MasterCard, pick on someone your own size. Okay? Bank of America, stop abusing my sister, dude. She's only got $300,000 in the bank. Come hammer me. I called my bank up this year, like I do every year, December the 30th. Well, I sent them an email to the president. Wipe every one of my fees, dude. I might have 8 or 9 different bank accounts. Every fee gets wiped at the end of the year. All the fees, right? That's what they do for rich people. Now, the rich people have to call them, but it's not fair that they don't do that for you, okay? It's not fair that they charge trillions of fees, these little hidden fees, 3 cents here, 8 cents there. They hold on to your money. There's $7 trillion sitting in cash accounts and money markets. That all should move to STRC or Bitcoin products or ETFs. All of it should move to that. All of it, man. So to me, it's that's why I really like the Clarity Bill, and I really like what Coinbase did, which was dig their heels in. You know they're right when Brad Garlinghouse responds and goes, we were going to capitulate. Now, this is very good. You do not want a bad bill for Bitcoin and crypto. And you want a good bill, okay? A bill that puts the digital banking system on the same level playing field as the legacy banks, who, by the way, have all the distribution. They have all the advantage of 100 years. They have all the advantage of migration issues. What is a migration issue? It's a guy like me moving off the system. And the core Bitcoiners are all like, hey, you're not a real Bitcoiner because you're still in the system. Dude, I've been in the system a long time. Migrating out of the system for me is extremely complex. It is not touch a button. I must have more than you do because you just do not understand. You guys have done a really, really poor job of understanding people like me. And this flood of people like me is going to take Bitcoin to a level that I think it's going to shock everyone, man. I think it's going to absolutely shock everyone because you're not really thinking big enough. You're thinking in terms of overthrowing the Fed, but this is about arbitraging all the inefficiencies. If you can remove the fuel away from these monopolies, they will start to behave in a competitive manner, right? All you need is people competing with them, though. And let's figure out who's going to survive this. But everyone, whether it's a digital bank or an analog bank, we should all be on a level playing field. I can mine Bitcoin right now for 90, for 95. I can go buy it on Coinbase for $95,000. Like, I think that's smart, dude. I don't need a mining center. I don't need a bunch of batteries. I don't need a bunch of long-term contracts. I don't need a whole team of people, a private jet with Mara on it and whatever they do and all their annual meetings and all that. Dude, I can just buy Bitcoin, just like Saylor has been telling you. It's cheaper to buy Bitcoin than to do anything else. And we're not early anymore, man. And we most certainly aren't late. And how do I know that? Well, because the rich people aren't here yet. The rich people are not here yet. The really rich people, okay? The old money is not come into the new money yet. And I think that's the transfer we're having. There's going to be $75 trillion in the next 10-ish years that move from wealthy boomers to young people. They're not going to buy silver, dude. Okay, that's not happening. That is not happening. Okay, they're not going to buy gold. They might buy the gold Rolex. I actually think that's probably done. But they are not going to hoard silver and gold. In a world that's going digital so fast, it's frightening.
The ongoing capital rotation from traditional assets toward Bitcoin reflects both structural inefficiencies in legacy financial systems and the growing appeal of scarce, digitally native assets. Hidden fees, idle cash reserves, and monopolistic practices within established banks create opportunities for digital currencies to capture displaced capital. Legislative initiatives and proactive corporate stances strengthen the regulatory framework, enabling digital banking and cryptocurrency products to operate on a more competitive footing with century-old institutions. Wealth transfers from older to younger generations further amplify this shift, as digitally literate investors favor Bitcoin over gold or silver for long-term value preservation. Direct acquisition of Bitcoin, bypassing complex infrastructure and mining requirements, increases accessibility and efficiency for investors. These factors collectively suggest that Bitcoin's strategic positioning as a high-quality, concentrated asset will continue to attract institutional and private capital, reinforcing its role in the evolving landscape of global wealth allocation. With trillions potentially moving from traditional banks and older assets into Bitcoin, would you shift your portfolio now or wait for the next market dip? Share your strategy in the comments, hit like if this insight helps, and subscribe for the latest updates on digital assets and market trends.